warm welcome. You've joined us on Midcap Masala right here on ET Now. I'm Ashesha Dhwaryu, with me Anushka Sarkar, and turning out to be a good day for Indian markets. In fact, Nifty is now trading near that 26,260 mark. Although we are off from the highest point, but despite that, continues to hold steady and sustaining at those all-time high levels. But let's put the spotlight on VST Tillers then. That one reported auto sales for the month of November, and that has been very strong. Other than that, it has also launched a new electric vehicle VDER, marking entry into another different segment altogether. And to understand that, we now have Antony Cherukara, CEO at VST Tillers and Tractors, now joining us. Thank you so much for taking your time out and joining us here on ET Now. And before we talk about the new launch that you made last week, let's talk about the auto sales numbers for the month of December and that for the month of November. And that has been very solid. If you can take us through what growth on a year-to-date basis?
Yeah, thank you for having me, and good morning to all the viewers. It has been a steady monsoon this year, and the water availability is good. That's a key demand driver for the agriculture sector for sure. And the GST reduction for the agriculture machinery from 12% to 5% has definitely been a boost on demand. And we are seeing continued growth in the agri machinery space. And that's had an effect on our business as well, especially the small and marginal farmers find it more affordable to buy these machines. The EMIs have gone down, that definitely helps them. And there is definitely an uptick in demand for all these reasons. Talking about the electric launch that we have had, we have launched the electric tiller and the electric weeder. The electric tiller is a 10.5 kilowatt hour machine, and the electric weeder is a 5 kilowatt hour machine. This is as per all the safety standards, AIS 156 Phase 2 safety standard, which, by the way, is not specific for farm machinery. However, we have ensured that all those are adhered to ensure the best and safest technology is brought to our small and marginal farmers.
Hi, Mr. Antony. This is Kanishka also joining in. Just wanted to understand, on the back of this new product that you have brought to the market, what kind of an opportunity size do you see for electric tillers and weeders in India over the next few quarters, or for that matter, next 2 to 3 years? What is the kind of market that you're seeing right now?
Yeah, the small and marginal farmer base is the largest in India, which is 80% of our farmers, which are the small and marginal holding, which is less than 5 acres of land. And those are the key buyers of power tillers and power weeders. Today, what is available is ICE engines to them, and there is a cost of fuel which they will have to incur. However, with electric vehicles, they won't have to incur that cost. Also, the fact that electricity is free for agriculture also ensures that the total cost of ownership during the lifetime of an electric weeder or an electric tiller definitely puts the farmer at an advantage. So we believe that going forward, this will be adapted. It's early stages. We are seeding it in the market in the coming quarter. We will have to increase the infrastructure. The electricity availability remains to be a challenge. However, we are giving charging of about 4 to 5 hours of working continuously, and we're also providing a fast charger with which he can, during his lunch time, charge up the battery for another 1 or 2 hours of work for the day. So the intent is to cover the whole day's work for the farmer, which we believe will enable him to adapt these machines. However, it's early days to give out any numbers on this.
As far as the new launch is concerned, but I want to go back to the point that I was trying to make. Last time, I believe you had given a guidance of about 6,400 to 7,000 units for the full year. Now, because the numbers have been very strong in the month of November, would you like to revise your guidance upwards for the full year?
Yeah, 6,400 to 7,000 is for our compact tractors. That remains the guidance, which will put us on a steady growth of over 20% this year on tractor front as well. The tiller, we have a higher guidance of over 30%. Last year, we did about 37,000 tillers. Over that, we expect to grow another 30% this year.
So that's about the guidance, but just wanted to get a view on your profit as well. In the quarter gone by, we saw a major profit hit, right, on a sequential basis. So what's the outlook for the remaining 2 quarters? Is it going to be positive from here on, or was there a one-off hit?
The range of EBITDA we have given is at 11 to 13%, and even in the last quarter, we have been able to maintain it at that. And the one-off expenses that was incurred last month is due to the the market value for the equity investments that we have had. So I think that's a one-off, and the equity markets are doing well, so that shouldn't impact us this year further. So we look forward to a strong 11 to 13% and more towards the 13% than towards the 11%.
And I believe you were also looking to set up European operations over a period of time. Any progress on that front, and how is export opportunity looking like for you at the moment?
Yes, we are in the process of setting up our operations. The team is working on it. We expect to be operational by the end of this financial year in Europe. This year we expect the international business to be flat. However, we have had some new launches in the recently conducted exhibition in Germany. We are getting good feedback on that, so we expect the next financial year to be quite good on the exports front as well.
So, Antony, earlier you did mention, that EV tractors are not yet viable for India. Any key reasons behind that? And do you think we have moved away from that situation and that's become, more viable since you've already launched your first e-farm equipment machinery?
Yeah, while EV tractors has still got challenges, but we believe, like in the same commentary, I had said that we believe that small machinery could be a success in the EV platform, using the EV platform. It basically is because of the usage of the machine. You need to get about 4 to 6 hours of continuous usage of the machine, which is doable on a smaller machine. It can be done on a tractor as well, but the power density has to increase. The cost really goes up, or you need a swappable battery, which again calls for further capital investment by the customer, which I find is difficult. However, on a smaller machine, this gets scaled down, and the usage we are able to deliver 4 to 5 hours of continuous usage, and with fast charging available to him, he is able to do it, for the full day, and he is able to complete his work. I think that is what is critical. And of course, the infrastructure availability will go a long way to help penetration both in the small space as well as tractors.
Oh, right. That's as far as export opportunity and several other prospects are concerned. But a two-part question. One is with respect to inorganic opportunities. And last time you did tell us that you are exploring inorganic opportunities. Any update on that front? And two, with respect to new tractor launches in the coming months, if you can shed some more light on that.
Yeah, there is no progress at this point on the inorganic. There is nothing to announce at this point. However, on the product launches, the Phantom launch, we are ramping up now. You will see those products coming into the market. It is a whole new range of products going forward in the year, that is in this financial year in Q4. You will also have a new platform between a power tiller and a tractor, which we had earlier announced, called Score. That will also be coming out into the market. We have a slew of products which is also lined up for the next financial year. We had made huge investments into R&D with our global tech center. That will also take shape in the next 1.5 years. So we continue to invest into new products at VST.
New investment continues in some of the new products that are going to come up in the coming months. That's the word coming in. Whereas export demand, that is likely going to remain muted for some more time. That's the word coming in. Thank you, Mr. Cherukara, for joining us today. On that note, we'll let you go. Lovely speaking with you today. All right, with that, time now to slip into a very short break. We'll be right back with more on this edition of Midcap Masala.